Good evening, everyone, and welcome to our CoreSSG tutorial. Tonight's webinar is brought to you by Ann Cunias, who's our Senior Manager of Education Programs here at Better Investing. Ann has been in multiple investment clubs and is a key member of our online tools development team. So without further ado, I'm going to turn it over to you, Ann. Take it away.
Okay, thank you very much, Susie, and welcome to everybody here. Yes, we are going to talk all about the CoreSSG tonight. This really is positioned in our tools to be perfect for new investors, to help you learn the basics of the fundamental stock analysis that we showcase on our stock selection guide. And we do that, you learn that while you're actively completing a stock selection guide, an SSG. So we're going to be going through that live here, and we do have a lot of information to cover, so quick disclaimer, we will be mentioning stocks by name, and when I do so, I am not making any kind of a recommendation to buy, hold, or sell any security. This is all for educational purposes only. We might go to various websites, products, services, go to their websites, not necessarily endorsed by Better Investing, and by mentioning them in this presentation is not a formal endorsement. As usual, we are recording this webinar, and we will make that available to you and others after the fact. So very quickly, our agenda tonight, as we have said, is really all about the CoreSSG. We're going to go through this online application, and we're going to demonstrate how to do the following things that you see there. We're going to complete an SSG together and go through the steps, the step-by-step process that we follow to complete a stock selection guide. Once we get through that, we will go through the steps to save an SSG, share an SSG, and update the SSG. As I said, the recording is being made tonight and should be available probably within a day or two, and we do post those on our YouTube channel at Better Investing. If you go to www.youtube.com/betterinvesting, I would encourage you to subscribe to our channel. That way you're notified whenever there's a new recording that has been uploaded, and you're always aware of the latest and greatest that we have. We do have a couple of handouts for you. These were posted online. They're also here, if you're here live in the webinar, as part of the handouts available through the control panel. We've got what we call our quick start guides, and it's a nice little document, and it does take you kind of step by step through the basic navigation of the CoreSSG. So you might want to use that, especially after this tutorial, when you can't really remember exactly how I got to a particular step. That's really handy to have by your side for the first few times that you're completing your stock selection guide. So we do have it here. It is also always available in our Help and Information tab, and I'm going to show you that live when we go into the tool. We've also got a few screenshots of a presentation. Now, this is not going to be a PowerPoint-based presentation, but we have posted these screenshots that capture really much of what I'm going to be demonstrating live during this webinar. So that'll be another reference for you to use, again, as you're trying to recreate some of the steps that we're doing here tonight. So the CoreSSG is part of several online tools that you do have access to if you do have a Core Better Investing membership, or if you have an SSG or a Plus, what we call our Plus Better Investing membership. To access our tools, it's very easy right from our Better Investing website. You log in to the website. It'll welcome you by name. You know you're logged in, and then you're going to go to this online tools box. This green box is our main access. You just type in your ticker right in the stock selection guide blank, click go, and it will open up a brand new stock selection guide for whatever ticker that you are interested in. If you're not sure if you are a subscriber to these tools, my suggestion is give it a try. Just type in something, type go, see what pops up. The system will tell you if you are not a subscriber, and you'll find out that way. And if you're not a subscriber, be aware that there is a trial version. And if you click on this bottom button, you can access a trial version for both the Core and the SSG Plus, and you could try everything that I'm going to show you here tonight using that trial version. So once you launch the tool by typing in a ticker, clicking on Go, the first, you're going to bring up the actual application, CoreSSG. So this is what the first screen looks like. We're just going to kind of look at this for a minute just to kind of give you the lay of the land. The CoreSSG is what we call a web-based application, which means it works on a PC, it works on a Mac, it will work on your tablets, it will even work on your smartphone. Anywhere where you have internet and a browser access, you will be able to access the application, the SSG application. And it's really, the CoreSSG in particular, is really designed for the newer investor, the less experienced investor. As I said at the beginning, maybe for somebody that's not totally familiar with our methodology. The tool is nice because it will focus us in on a single metric at a time. So for instance, the first metric that we look at is historical sales. This screen is all about historical sales, and it will step you through just taking one concept at a time, which is really good as you're introducing yourself and learning the methodology for the first time. So just to get a little bit of what we're seeing here, every screen is pretty much set up the same. So whether you're looking at sales or earnings or PE ratios, that kind of thing, they're all set up the same. And we have a graphical display of historical data that is displayed here on a nice graph. We also have that same data represented in a tabular display that is right here below that. Each screen on the CoreSSG has a box here that's labeled Education, and that's where we give you some basic information. So if you are a true newbie, brand new, this is very helpful to read through the information we've given you here. It will give you some pointers as far as what you're looking at, why it's important, some of the things that you should be looking for. So that is a great learning aspect of this tool. Below that, there is a legend. This allows you to place lines on the graph, turn them on and off, and we're going to go into a little bit more detail on that as we go into the tool. Up at the top, we have several menu items here. These are for pretty much specialized functions such as printing, some research tabs, other things that we have that are kind of outside the actual completion of the SSG, but very important specialized functions. The main navigation for the tool is right here along the top. So notice that we've got the 5 tabs, okay? Analyze, growth, evaluate, management, and you can read across there. Each tab is broken up into several steps. So as you're going through the tabs, you can go step 1, step 2, step 3. That is our step-by-step basis or method for going through this tool. As I said, we do have the 5 tabs. If you click through, you complete the steps underneath them, then move on to the next tab, and so on. If you do that, before you know it, you will have stepped through the entire process. It kind of leads you through the learning, and you have completed your stock selection guide. As I said, this is basically the same setup on every single page, so once you become familiar with it, it's quite easy to get acclimated to the subsequent screens. One other part that I forgot to mention, and my pointer here is reminding me, that there you can navigate by clicking directly on these steps, but we also have these handy next and back button just to kind of, if you're going in order, you can just keep clicking next, next, next until you complete the stock selection guide. So that is a basic overview. As I said, we do have a number of screenshots available in that handout, but we're going to just go live to the tool because it's just easier for me to demonstrate rather than always going through PowerPoints. So actually, I wasn't going to show you this. I was going to show you the first screen here, the home page, where it's welcoming me by name. And this is the box that I was referring to where you can put in your ticker. And tonight we're going to use Gentex. Gentex Corp is an auto parts company. I click on Go, and that will open up the screen. Now, if you saw, I did have that already open just to save a couple of seconds. So here we are looking at the very first screen for the Gentex company. Now, before we get into this, I just want to back up just a little bit because I know we have some people in the audience that are Plus subscribers, Plus members, but perhaps are more interested in using the core. Maybe you are truly more of a beginner. Maybe you want to use the core at a club meeting to introduce new members, whatever. And maybe your screen as you're coming in here doesn't look at all like my screen. So if you're a Plus member, and I'm going to switch over to the Plus view, and maybe your screen looks more similar to this. If that's the case, let me just make you aware that as a Plus subscriber, you have not only access to all the Plus tools, but of course you also have access to the core tools as well. And this is that handy little button that I just clicked to show you this view. And so if this is your view and if you want to get to the core, just quickly click that and it will take you, that same stock study, back to the core view. And that's how you get back and forth if you are a Plus subscriber. Of course, if you're a core subscriber, you won't see this button because this is your tool, and that's as it should be. We're here. We're all in the right place. Okay, so here we are starting a brand new study. You heard about this company, Gentex. Maybe you're wondering what the company actually does. When I'm just simply hovering my cursor, I placed my cursor, my red pointer there, over the title bar where the company name is located. And when I hover, you can see that that brings up a box of information, basic company information that is very helpful to you to learn a little bit more about the company. You know, you can quickly see what industry and sector this company is in. So as I said, it's an auto parts company, which is part of the consumer cyclical sector. You can read a brief description there of what Gentex does. They design and manufacture automatic dimming rear view mirrors and electronics for the automotive industry. So we've already learned quite a bit about this company. We know who their customers are, automotive, you know, they have some other things there, but we've learned just quite a bit by just hovering and learning and reading that little bit of a snippet. That's very helpful, especially when we're not familiar at all with the company. The next thing that I'm going to want to do when I'm on this first screen is, this is all about the historical sales. So I want to evaluate the historical sales over the past 10 years. What we're looking for on a graph is typically we're looking for a company that has strong and steady growth, historical growth of sales. And what I'm seeing here, and we're seeing all the data, the annual data points listed here on the chart, as you see, and I see strong growth. It's not quite as perfectly straight and steady as maybe some other companies you have seen. I can see that this company does seem to be sensitive to a recession, sensitive to the economy. And if you recall, back in 2009, we had what was known as the Great Recession. The automotive companies were struggling at that time. That is a main part of their customer base, so their sales took a dip at that time. So this is consumer cyclical. There is a cyclical element to this stock, and so I've learned that just by looking at this company, at this graph, excuse me. As I said, we have the data presented here, and you're probably noticing that the data, actual data pieces, the 2009 545, it's telling me what that piece of data was back in 2009. We call this an active graph. It just means that, you know, when we hover over various data points, we can actually see the data. We can also see the data down here in this tabular field. It's the same data, so notice 545 when I'm hovering there over 2009, same piece of data right there, $545 million in sales in that particular year. The other thing you may be noticing is that we have a couple of open circles out at the end here. Those represent our most recent quarterly figures. So if it's open circles, those are quarterly. If they're filled in circles, those are our annual data. We have a green line, a green straight line that is underlying all the data. And that's basically our growth rate trend line. And that's measuring the rate of growth for all of the data points for the stock using a best fit analysis. So we see that since 2006, over these 10 data points, 10 years of history, we've got a growth rate which is called out down here in the tabular data of 12.6%. In addition, in the tabular data, we also have recent quarterly figures, and this is reporting the most recent year-over-year quarterly growth of 11.7%. Now, another thing I want to bring to your attention is perhaps you want to measure some different periods of growth. Maybe you want to eliminate this 2009 data and see what the growth would be without that. So we have 12.6% for all the data. If I just click on the year, see how my cursor has changed to a hand? I click on that, and that eliminates that piece of data. It redraws the graph, recalculates my trend line, and now I see that without that one piece of data, I have a growth rate of about 11.9%. And you can go on and you can eliminate as many pieces of data as you like. I do this when I'm trying to measure different. If I observe that there is a differing growth rate in the most recent period, I want to maybe eliminate some of the data to measure that particular growth. You can also take, we call them outliers, or take some of the data out that doesn't seem to fit. You can also click here in the data grid, same effect. It basically removes the piece of data and recalculates the growth rate. You can put those back in by clicking again and get back to where we were. All right, another very popular and very powerful feature that we have is this ability to evaluate our peer data right on the same graph. So I know it's hard to see and it's small and faint, but these grayed out are actually pre-selected default peers that the tool has selected for us. We have VC, I think that's Vistion, and a couple others here. And I'm just looking at them, and you want to kind of see, are these good competitors? How did they look compared to yours? What are we looking for? We're looking always for kind of the best stock in an industry. And when I'm looking at these, I'm not all that impressed with what I'm seeing. Another tip, wherever you see these little down triangles, I guess, you see this open-close data grid. These expand, and I can actually look at the data for all of these competitors. We've got this Vistion, I've not really heard of this metal, I don't even know how to say that. But anyways, MPG, you can see what their growth rates are if we were to fit a trend line on all of their data. I see this orange, which everything's color-coded. That's MPG, doesn't really have a lot of history. I don't love this set of competitors. And let's just say, through my research, that I chose some different competitors. I'm not that impressed with looking at the historical sales here. So you have the ability to pick your own peers and competitors that you would like to place on the chart and compare to your stock under study. So just to demonstrate, I've picked out a few different ones. So I'm going to go to this Change Peers button. That's right in the legend, Change Peers. So when I click that, that opens up another window, and here it's allowing me to change the peers. So with a little bit of research that I've done, I know that Magna International competes on some level with Gentex, much bigger company. Borg Warner also makes auto parts for automotive manufacturers, as does Gentherm. I did not type that right. There we go. So I have picked out, and you could have any stocks here, and you don't have to get rid of them all. You could pick and choose. I'm going to update the study once you're happy with that. Now I have a different set of competitors. So I can look at, that's Gentherm, color-coded. It's a smaller company than Gentex. I can tell because it's lower on my graph. I can also tell by looking at the data down below. I've got Magna International, a much larger company than the company that I have under study. They're actually much more diverse, but and then we have Borg Warner, which is kind of in between. But these three, to me, look like they've got some better trends in growth. So I'm happier with this set of competitors, peers, if you will. And again, I'm opening this up to look at the underlying data underneath. You can do the same to see how they performed recently in the recent quarter data. So those are some handy things to be aware of. All right, I think I am ready to move on to the next step. So we have completed our analysis of our historical sales growth, and I'm pretty happy with the way Gentex is looking on its own and in comparison to others. So I'm going to go to the next step by clicking my next button. I am going to temporarily turn off my peers so I can just focus in on what Gentex is showing me. And again, we're looking for the same kind of information as we were with sales. We're looking for strong growth, and we're looking for steady growth, strong and steady. Again, we see that they had their issues with the recession back in 2008 and 2009. They've come out of it very nicely and kind of reestablished that growth. Our 16% growth is over the entire 10-year period. Again, to demonstrate, I can take out outliers to measure what the growth would be without those particular pieces of data, and that translates into a 12.3% growth rate. Again, we've got our open circles showing me what has Gentex done in the most recent quarter, and they had a 20% year-over-year quarterly growth. And the most recent quarter is reported from June of 2016. So they're getting ready to close their books on their third quarter, and that'll be reported sometime in October. I'm looking at my notes to see. Everything is pretty much very similar here. Again, we can bring up our competitors. We can look at the earnings per share on Gentherm. Magna International looks quite steady, except for that recession. I'm going to put this data back in just so we can see. You know, because I do like to see, this is a cyclical company, and when you're looking at others in their same industry, you see that, yeah, they all pretty much had some issues back then. So that's a little bit reassuring in that it's not a company-specific issue, but more of an economic issue, I guess I would call that. All right, so here again, I am just simply evaluating our past growth. We do this to help us evaluate the quality of the company. I've said it, this will be at least the third or fourth time, we're looking for strong and consistent growth. Strong and consistent growth indicates a high quality growth company. That's one of two sections that we're going to look at for quality. And we're going to move on to the third step in our first tab here, step 3. And I can click right here just to show you a different way. Going to step 3, and this is, we're calling this historical stock price review. And here we have put the sales line, the green sales line, on the same chart as the blue earnings line, and we also add the price bars. Now the price bars for every one of these 10 years of history are reporting to us what has been the highest price in the year and the lowest price of the year. The longer the line, the more volatile the stock has been in that particular year. So back in these recession years, you can see that they were quite volatile, and lately they've been kind of tightening up a little bit. There's less movement in the course of a year. But a longer line means there's just a larger spread of the price data. This last line here that is off on the next year is actually our 52-week high and low, with our little red indicator just giving us an indication of the last closing price. This would be the closing price from yesterday because I just brought this data up. We like to look at this view because one of our mantras is that in general and over the long term, earnings will follow sales. And over the long term, prices will follow earnings. That's kind of a basis of our fundamental analysis. It never goes like hand in hand and step by step. You're not going to get a perfect match, but over the long term, we do see this relationship over and over and over again. Again, you can look at the data down here, the same data that you see when I hover over this active graph. I'm going to pause here, Susie, just to ask if there, before I move on to our next tab, to see if there are any questions about the first one, analyzing growth.
No, I think we've got everything handled here. So I will encourage people, if they have questions along the way, please write them in using the chat panel. And if they're relevant to what Anne's going through, we'll circle back and have her answer them live.
Perfect. All right, well, we'll keep going then. So we have completed now the third step. And here, let me just point out one more thing that I have neglected to mention. You always know where you are in the tool by noting which one of these tabs is in green, so I'm in Analyze Growth, and which one of the steps is in red. So that's an indicator of where exactly you are in the tool in case you've forgotten or lost your way. I'm going to go to the next, and here you see next takes me to the next tab because we were done with our steps in tab number 1. So now we're in Evaluate Management. This is kind of the second part of evaluating the quality of a company. We've got 4 steps to go through here. The first one is to take a look at the pre-tax profit on sales. Another term for that is our pre-tax profit margin. This is giving us the historical data, again, over the past 10 years with our open quarterly figures presented as well. Now, profit margin, or percent pre-tax profit on sales, is simply reporting to us how many pennies of profit the company has made on a dollar's worth of sales. So you can see in the most recent 2015 fiscal year, for a dollar's worth of sales that Gentex made, about 30 cents of that is pre-tax profit for this particular company. What we like to see here is we like to see either an even trend So that means that the profit margins are being held steady, expenses are under control, management has their eye on the ball, as we like to say. You know, they're keeping a tight rein on the company. We either like to see them steady, which would be a straight horizontal line across, or a slight increase is always good. Now here we're seeing quite a bit of volatility, I guess, a lot of changes. But again, remember back to what we saw on our earnings screen, on our earnings chart graph. You know, we had that issue with the Great Recession, so yes, profit margins suffered in this period. But since that time, we see that they've gotten back on track and even have increased their recent profit margins at a level higher than what they were pre-recession, which is another good indicator. So overall, I'm calling this an upward trend, and I like to see that. I also always like to look and compare these to the others, other competitors. I see Gentherm is, you know, pretty good, pretty consistent. Lately, it looks like they're having a couple of issues in their quarterly data. Magna International, while at a lower level of profit margin, this trend is very, very nice. And Borg Warner also has more what I'm calling that flat or even trend, and really there's nothing wrong with an even trend. Now you'll notice that Gentex, our stock that we've got under study, is a higher level of profit margin than these other three. And you can, again, reveal the data and take a look at that. But the point I was going to make is, you know, it's probably not fair to compare side by side the profit margins with, say, a Gentex, which is pretty much of a niche company. They make a smaller number of products than a Magna International, which makes a far greater number of products for the automotive industry. So you have to take all of that into consideration. But when I am evaluating the trends and the values that I see here on Gentex, I like everything I have to see about that. Yes, ma'am. Question?
Yes, we do have a question, and it is in regards to a couple of other data items that are available that are actually particularly relevant in this area where we're talking about pre-tax profit and other
Sure.
quality and management items, and those are the industry averages. And
okay.
so
yes.
forth.
And I have neglected those, and that's my fault. I should mention these. In addition,
right.
Is there another question that before I start?
No, that's the question. How come? And should we use those? And
yes.
Yes.
Okay. So Susie is reminding me to look at these industry averages and see where these lie, and also you can make that a little bit smaller subset to the peer group average. I'm just going to put one because they seem to be laying right on top of each other. I do like to look at these, although less frequently, I have to say, and that's probably why I neglected to do that. But I do like to see what are the general trends, and does my company match these general industry average trends, and how is my company in comparison to the industry averages? So we see that for Gentex, for whatever reason, they are much more profitable than the average in the industry. And we can put a couple of the other ones on here just to kind of see where they lie. But overall, I'd say we have a pretty good grouping here of stocks because they're all either right at or above the industry averages. And I think that is what you want to check when you are looking at industry averages, to make sure that your company is not one of the laggards that is way down below an industry average. So thank you for that reminder.
All right, thank you, Ann. I think that's it for right now.
All right, well then let's move on to our next evaluate management item, and that is our percent earned on equity, also known as ROE, return on equity. Maybe you've seen this number. Again, here, this is a measurement of how the company is able to grow basically the net worth of the business. Equity is the net worth of a company, and what they're earning on it as a percentage is measured and is presented here. A company that is growing nicely is going to have a nice consistent return on equity, or possibly even better, a growing return on equity, a return on equity that is achieving higher levels. But again, just like with pre-tax profit, a nice horizontal line along here is a wonderful thing. Also, we also like to see a number. Now, there's no absolute number for profit margins. That does vary from industry to industry. But generally, for a company, I like to see my return on equity be somewhere in the mid-teens, maybe even closer to 20% for what might be classified as an excellent company. Again, we're seeing the same trends. Overall, I'm calling this an upward trend. I like that. And we see that the levels that they've achieved in the past few years has achieved at a higher level than where they came in pre-recession. So again, these are excellent trends. In the most recent 5 years, this is definitely up. That's what we like to see. And these levels are starting to approach 20%, which is very, very nice. So I like to see that. Again, you can quickly take a look. Gentherm has been ramping up very nicely on return on equity. Magna also has a very nice trend, and our purple Borg Warner a little bit declining there. And again, just to remind you, you can open those up and and look in detail at all of the information. But those are all pretty nice numbers. So again, I have no issue with my company. Oh, let's look at the industry average just to see. It's too much stuff. I have to take some of this off. So our blue is industry average, and we are kind of just right in there with the rest of the industry. So good to see. All right, I'm going to move on to the next evaluate management metric, and that's taking a look at debt. Now this graph here is giving us a historical look at the total debt the company has had over the past 10 years. So we can see that it was 0, 0, 0. They took on some debt in the most recent few years, and it's starting to come down a bit. While this is informative and it can be useful for looking at trends, I don't spend a lot of time on this tab because, for one thing, I don't know, what it means when my company has $233 million worth of debt. I prefer to look at this in context of something, and our next tab, going to our next step, will put our debt in the context of the total capital of the company. To me, that's a more valuable measure because then I can say, I can compare one company to another by looking at this metric. So again, here, we do have this rule of thumb, I guess, that for most manufacturing or service-oriented companies, we wouldn't want to see more than about a third of the capital structure be debt. This Gentex is well below that, so I don't see any issues with that. We can take a look at some of the other ones just to see how they measure, because as you can see, now we can say, we can see that who has more debt. We can see that Borg Warner most recently had 42% debt to capital. So just looking at the millions of dollars of debt is interesting for trends, but this is, for me, the more valuable piece of information. Taking a look again at industry averages, well, all of our companies are below a very high industry average of almost 57%. So good for us. Good for our companies that we have under study. So at this point, we've gone through the first two tabs, and really the whole purpose of reviewing all this fundamental data that we have been looking at is to determine if we've got that high quality growth company. Really our stock selection guide works best for companies that are high-quality growth companies, and we tend to want to stick to those. So at this point, we pause and we kind of ask ourselves, did this company meet my quality criteria, my minimum values that I'm looking for? Because if it doesn't, I don't want to spend the time doing, research and learning more about the company, because the next part of our stock selection guide requires you to do a little bit of homework and a little bit of due diligence to dig in and make some estimates for future growth. So we have this, what we like to refer to as a barbed wire fence, if you can envision, between evaluate management and where we forecast our sales. And only if you can have a high quality company do you want to risk, I guess, getting cut by the barbed wire fence. I'm pretty happy with what I've seen on Gentex, so I say yes, we have a quality growth company here, and yes, I do want to go on and continue my study and begin my forecasting. Okay, so we shall go into that. So I just clicked my next, which took me right to the third tab, and this is where we forecast our sales and our earnings. This is really the first time that we are adding our judgment to the stock selection guide. And we notice that our display has changed just a little bit. So let's look at some of the new information. First of all, our graph is extended 5 more years. We've got 5 years here because we are going to be making a 5-year forecast. We are going to estimate or project where we think the sales will be 5 years in the future. We have a dotted line here that's horizontal. That's our projection. Our projection hasn't been made yet, so at this point it's 0, and that's why it's flat. That will change once we make our projection. We have another light green line here, and that is giving us an analyst consensus estimate, a shorter term, not 5 years. Notice that it only goes 2 years out, but that's coming in with our data. It's an analyst consensus estimate, a piece of information you can use as you do your research, telling us that from the Morningstar data, the analysts that send in their information to Morningstar, they are consenting on a 9.1% 2-year estimate for future sales. Okay, so that's one piece of data that you can use when you are making your projection. I will point out that this 2-year estimate is always starting at the most recent fiscal year. So this starts at the completed year of 2015, and you'll see the line go out 2 years to exactly the end of 2017. So that's what that piece of information is. Now you're going to want to do some research at this point. You are going to want to reference other materials to help you formulate a future projection. We're going to use our history, we're going to look at that history, but really when we're making a forward-looking projection, it does take a little bit of research. And we do make that easy for you. We give you these tabs up at the front in this menu item called Research. There's a lot of links here where you can go and get more information and learn about the company. I love to go to the company website, for example. I'll just click on that very quickly. Notice it opens up in its own window, its own tab, so I can easily get back to my stock study. I go to the Gentex page. I look around for investors. I came here earlier just to scout it, and I see that the investors link is right there. I click on that. Nice presentation that they give me, and I like it because one of the first things I see is I get a presentation that Gentex, the company, made to the analyst community. That's usually quite useful information for you to learn more about the company, what their plans are for future growth, where are they positioned in the industry. So that's wonderful information, and I highly recommend that you check those out. I'm not going to go through all of these, but we do have a number of analyst estimate sites that you can go to. One that I know has a little bit of data on revenues, because frankly that's a little bit harder to find, is Yahoo Analyst Estimates. And while we wait for that to load, we will see shortly that they also will give us a 2-year revenue estimate for the current year and the next year. So we can see that these 9 analysts that have submitted the data to the company that put all this data together, which is actually Thomson Reuters, 10.2 for this year, 7.7 for the following year. More data that we can gather and have at our disposal. I don't have time to go through, judgment is a big thing. I encourage you to check with your local library, your brokerages, see what kind of premium reports you might have, perhaps a premium analyst report from Morningstar, an S&P report, a value line report. All of these might be available at your library, sometimes through your brokerage. Check out what is available to you. I'm just going to say, for the sake of getting this moving along, that I've done my homework. And in my estimation at this time, I thought an 8% growth rate was reasonable for Gentex. So I typed in an 8 in my box there, where I put in my forecast. I'm going to update my study, and now watch that dotted line. It's going to get updated, and there we are. So now I am making a projection for the next 5 years at 8%, and if my company were to grow 8% sales, that will result in a $2,387,000,000 company in 5 years in the future. I was going to make a point, and I forgot what it was, so I will just move on. All right, well, I don't know. I want to talk about these projection start points because this is very, very important. So you see that my projection start point is quarter. You have 2 other options. What this means is that I am starting my projection from the most recent quarterly figure. So that means I'm going a full 5 years out. So not from the end of the fiscal year, but from this quarter. So I am projecting all the way out to the second quarter in actually the fiscal year 2021. Okay, I like to do that. I generally will do that for a company that I deem to be a growth company, which those are the kind of companies that we should be looking at on a stock selection guide. So I will typically use quarter. There are some occasions, or maybe you want to be more conservative, which would be a more conservative, generally, projection start point, to pick the annual data. When you do that, it's going to start your projection a couple quarters back, and it will adjust the outlook just a little. So notice that here we have almost $2.4 billion in future sales when we are projecting from the most recent quarter. Notice when I click here to make it go from the annual data, it will quickly redraw that. I'm going from the annual to the end of the 2020 year, and that reduced it by just a bit, $2,268,000,000. Okay, so it does make a difference, especially when you've got a growth company that has, 2 or 3 good growth quarters under their belt. I do like to use annual. That is my default. If that is not your default and you would like to change that, the place you change that is you go to Tools, up here in this menu bar, Preferences, and this is where you can allow yourself to change, and pick what is your default for all your new studies going forward. But whatever you pick, you can always change it right here in the form, in the tool itself. All right, so we've got our future forecast for sales. We're going to go and we're going to do the same for earnings. Again, the same information. We've got a flat projection. Our projection hasn't been made yet. Here we do have a 5-year forecast, an analyst consensus estimate that coming in with our data, 9.6% we see that to be. This is, from the Morningstar analyst estimate, consensus estimates, I should say. I will go out and I will check other places. I will go and check Yahoo. I will go and check, the Morningstar premium report, which might have a little bit different information, S&P, a variety of places to refer to. Again, that's not what this class is. It's not a judgment class. We have others for that. So for the sake of science and to speed things along here, I will say I have done my due diligence and I am going to go with the same rate of growth for earnings as I picked for sales. I'm going to pick 8%, update my study. My dotted line now gets projected at that rate, and I can see here that in 5 years that results in an earnings per share of $1.70. Now that's a very important number. We use this future earnings 5 years in the future. The whole point of making this projection is to help us project a future high price for the company. This is half of the equation that we use. That's why we do it. This is where that number comes from, and we're going to refer to that in our next section. All right, so that's it. We have forecasts. Now, that was very speedy, like I said. Research is very important, and I'll just leave you with that. We're going to go on to the next, and where we assess our risk and reward. We're in step 1 here, and this is where we forecast our future high price. So here we are. What are we looking at here? This is an interesting chart. Looks like a big ski slope here. But what we are looking at is the historical high PE. These are the PE values that we've seen over the past 10 years, the highest PE values in the course of the year for this company, Gentex. We see that it has been on a decline, that the PEs kind of went up in that recessionary period, which kind of makes sense because when your earnings goes way down and your price doesn't go down quite as much because the investing public has faith that you will pull out of this, that makes your PE go higher. That's exactly what happened here. And since they've been continuing their good growth, the PE has actually been declining. We see here an average. We can see the values down here, just like in all the other screens. We have our table as well as our graph. I love looking at the graph to identify the trends. Here we're measuring and looking at the last 5-year average for the PE, for the high PE. We're going to use this information as well as, other things that maybe we can find to help us make a forecast on our future PE, future high average PE. And we are actually trying to come up with a projection for what we think this number, this 5-year average, will look like in 2020. 5 years from now. So we're not looking for the absolute highest or the lowest. We're looking for what do we think will be a reasonable average. Well, I do see that we've been on a decline, and it's really hard to estimate these things, but I'm thinking that I'm going to, again, you can take outliers on here and recalculate the averages, which I've just done. I took out that high level 31, and maybe I'll take out the 27 to be conservative, because remember, I'm estimating there to be a reduction in my future growth. So often when there's a reduction in future growth, a reduction in PE sometimes goes with that. But I'm kind of comfortable with taking something conservatively in the neighborhood of 19.6, 20, somewhere in there. That would be fine. I can type in my number here. I could just type in a 20. Here's a shortcut I will share with you. You can just double click. I clicked twice with my left mouse button right on any of these numbers and it'll populate it. It'll pop it in there for you. Let's review some of these other numbers that we're looking at. Here's the 5-year average PE. This is the average of the high and the low, the average of the two averages. And this is our current PE at 15.2 based on the current earnings, trailing 12 months, and the closing price. There's that $1.70 because we have our high PE times our high earnings per share. You multiply those two together, and that results in a high forecast price, a high stock price forecast. I should just read that. So the $1.70, that came from our earnings per share forecast. So 33.3, I'm pretty happy with that. I'm going to update my study using that data, and now I have established a high price. Going into the next, or just to remind you that I'll just click on the next step right there, and we do the same kind of exercise with the forecast low price. Oh, I forgot to mention that we can look at see how our competitors have been valued in the historical data as well, and we can look at that data. And we could have done that on the previous slide as well, screen. All right, so here we are. We're looking at kind of the same trends. Again, maybe I would take out that 19. All of these seem kind of grouped together. Maybe a 12.6 or a 12-ish PE. Let's just take 12.6 and see what happens there. So I double-clicked, again, my little shortcut, love those little tips, to pick my forecast low PE. That might be reasonable. My low earnings per share forecast, where does that come from? Where does my $1.08 come from? Well, that actually comes from the most recent fiscal year. Okay, so 2015. In 2015, that annual piece of data for earnings was $1.08. Well, we have another piece of data, and that's our last 4 quarters earnings per share. And generally, for growth companies, I will pick the most recent 4 quarters, and I will substitute that to give the company credit for any recent growth. So I'm going to double-click there, again, to pick that. I see that that results in a $14.60 low stock price. One of the things I always like to check before I select a low stock price is to make sure that I'm sufficiently below the current price to make sure that I've accounted for market volatility, stuff that just happens that, is really outside of the company. This is about $3 below. That's a little less than 20%. For a cyclical company such as this, I'd probably want to go a little bit lower than that, maybe 30% below, just to accommodate for market volatility. So to do that, I would probably adjust my, here we go, I would adjust my low PE to maybe a little bit lower, just a number a little bit lower. If I pick 11, well, that gives me about a $5 difference, which is in the order of 30%, I think, if I'm doing my math right. Good enough. Good enough. I'm happy with that. I notice that that's very close to another option I see. I see our recent market low price. I could have clicked that. I do like to usually adjust my low PEs. I could also have the option, if you're not happy with any of these, to put in your own number. So those are your options that you have available. I would say most all the time, 9 times out of 10 at least, I am picking low PE times low earnings per share forecast and figuring out something that seems reasonable. I'm going to go ahead and update the study using these. And we're coming in on the home stretch here. We have now established a low price. So we've established a high price, a low price. Our next step is to kind of assess where are we in this current range. So here we've got a chart. It's telling us my forecasted low price. We just established that, the forecasted high price, and it places the current price on this graph. And this is our zones, okay? So we've got our buy, our hold, and our sell zone, with our lower 25% being the buy, the top 25% being the sell, and everything in between is what we call the hold zone. We see that at 1760 is the current price, that this is just in the buy zone according to the judgments that I have very quickly put in here. So it's a buy, it's what it's telling me. And if we go quickly to the next section here, we have this metric called the upside-downside ratio, which basically we're looking for our upside to be 3 times larger, our upside reward potential 3 times larger than our downside risk. And we see that it meets that metric at a 3.2 to 1. So it's greater than 3 to 1, so the upside-downside ratio looks good as well. If it was less than 3 to 1 or in the hold zone, we would probably make a note of that and place it on a watch list and wait for an opportunity. But we're not done yet. We still have one more little piece of information to look at, a couple more pieces. And this is where we kind of look at the bottom line and we look at determining our 5-year potential, kind of putting it all together. 5-year potential as an investment. And the graph that we're looking at here actually only applies to dividend-paying stocks. And what we're looking at here is the percent payout. This is the percent of the earnings the company has paid out in the form of a dividend. Okay, so if you expand this, instead of other companies here, you get more information, such as the historical earnings, the historical dividends that were paid, the high yield for that year, and you can see what's going on. So the payout ratio was quite high back in those recession years because why? Well, this company held their dividends steady even though they were having very tough times with their earnings. They said, well, we're committed to our dividend, we're going to hold that steady. So that meant that they were paying out almost all of their earnings in the form of a dividend. Kind of an unusual situation, and one they hoped would not last very long. And of course it didn't. As they came and they earned more money, they continued to improve their dividend, but they became a much smaller part of the payout ratio. The dividend was a smaller piece of the earnings. So the average, this is a minor judgment that we make on our stock selection guide. We use the average by default, 37%, and that makes a contribution to our future potential return. So using 37% would result in a future yield component of 1.9%. Well, 37% might be a little bit high when we're looking at some of these higher numbers, and maybe you want to adjust that downwards somewhere around 30%. I am going to try to do that here, and I'm just going to change this to be 31 for the sake of science. Watch what happens when I hit Update Study. I'm going to hit, it's going to move from 1.9 to, drum roll, 1.6%. So it doesn't make a huge difference, but it is a minor judgment that you should pay attention to. With that minor judgment being made, we've got two pieces that go into our total return. Our price appreciation, if we were to sell the stock at that forecast high price. Add to that our potential yield, gives us our total rate of return. Is there a question, Susie?
Yes, I have a couple of questions. If you're kind of through with the tools aspect here?
I am mostly, yes, we are done. I mean, not completely done. We have to do a save and we have to show a couple of other features, but...
Okay. So because we're kind of wrapping it up here and making a bunch of estimates at the end, we're getting some questions regarding the actual making of judgments. And that's not really the point of the class here. The point is to get us through all the places we can click and so forth. But can you give our audience some references on where they can go to learn more about how to make judgments, how to evaluate PEs, and so forth?
Absolutely, I will. But before we do that, let me just save this because I want to demonstrate this, and then I'll do that next, I promise. Okay, so let's notice here, big yellow box. It's like a warning. Study's not saved. Click to save. So we've completed our study, and we want to save this. So it's just that simple. Click on this button, and you have the option to save the study. I'm going to add a little bit of a name here, tutorial, if I can spell core tutorial, just so I have a reference. I'm going to save that. My yellow box will then go away. I see that my name has been updated to reflect what I've just recently named it. And now I have no worries about losing my judgments, all the work that I have done in this study. Now, to your point, where do you go? We have a lot of references, and I'm going to take you to this help icon right here, which is part of our tools, because if you forget what I'm going to tell you, it's here. We have some basic methodology, more information on our methodology. Go to the Education tab of My Classes and click here to access them directly. I just clicked there so we could get there quickly. This is part of every person's membership. Every single Better Investing member has access to at least some of these classes. The ones that we all have access to is the Introduction to the SSG series. This is a 5-part series, lots of activities, lots of references. You can listen to the recordings, look at the handouts, do the exercises. This will be your first entry into judgments and how to make them, and I would recommend, if you're brand new, that's where you start. We also have another tool that is adding judgment to your stock selection guide. This is a member benefit currently for Plus members, but so soon, like I want to say next week in our new fiscal year, we are now including this for our core members as well. So if you're a core member, core subscriber, or a Plus member, you will also have access to this Adding Judgment series, another 5-part series that goes into a lot more depth of how to make the judgments that I really whisked through this evening, because as Susie said, this is not the course for that. This is more on how to navigate the tool. So those are where I would point you initially, and those are the best places. We also have other webinars such as Ticker Talk, Stock Up. We're always doing various things there. I encourage you to come live, view recordings, and see what you can find there. But we're often talking judgment. Judgment is a very popular topic, right?
Right.
Right. Okay, where am I? Almost out of time. The important things to cover here, let me review my notes. Printing. People always want to know how to print. I'm going to show you that we have our print menu item. What we do is we create a PDF. So when I generate my PDF, I see that it's working on it. It takes just a second. There's my pop-up. I'm opening that. It came up on my other screen, and there it is. And so here is what we call our traditional printed stock selection guide with all of our information. There are our estimates that we made and our judgments. If I took outliers, those are kind of grayed out. You can see everything, including, you know, the final results. As it's a little bit different point of view, a little bit different look than the tool, but it has everything compactly presented in 2 pages. And you can save that to your computer, send it off to anyone you want to share that with. But speaking of sharing, we actually have another way to share studies, and I want to point that out very, very quickly. If you do belong to a club, or you know, you have somebody you're discussing a stock with, you can go to File and Share Study, and we have a lot of different ways to share it. You can share a copy of the online study. Anybody that has a Core or a Plus subscription will be able to click a link in the email, and it will be automatically put right into their own library of studies. You can also, these next 2 are for importing into somebody that uses the desktop version. Investors Toolkit is a desktop program that does SSGs. I recommend the ITK data file. It's more complete than the SSG data file. That's one I always use. And you can also send a PDF format. So you can send these to yourself. You select your recipients. We allow you to have a library of, I shouldn't say library, what am I looking for? Address book. And I'm sending this to you, Susie. And I'm not giving you a message. And I'm going to hit share study. And Susie is going to get a copy of this. I'm going to get another copy of this. She's going to, as a subscriber, going to be able to click on that link and put it right directly into her own library. Or she could view that PDF. You are very welcome. All right, remind me, what else? Is there any, update. How about update?
Updating.
Update, yeah, let's do an update. Okay, so I'm also going to introduce you very briefly to this QuickNav application. QuickNav, I love QuickNav because it gives you quick access to all the studies in your, all your studies that you have saved. And last time I did this, okay. My computer is dinging at me. You can't hear it, but something is dinging at me. Some alert just went off. Okay, core tutorial. So I have a lot of CVS studies. We did CVS. I do a lot of this for education. This is the one I used for the core tutorial last time that we ran this. And so here it is, just to review. You know, has our judgments in there. We had 9%, and I don't know what I picked for the other one, but I just want to show you very quickly that notice that our most recent data is from 2014. That would, from 15, 9/15 was our latest quarter. That's old data. We need to go to data, refresh. Refresh is going to give us some options. And maybe I need to click that again. Yes. Okay. So we have three options. You can just look at and update the closing price if that's all that you think you need. You can overwrite the existing data and prices in this study, or you can create a copy. And I am going to create a copy just for the sake of science. Okay, so I'm going to refresh my data, and what that does is it will refresh my data to give me the most recent data that is available, so that's 6/16. But what it does not do is change any of my judgments. I still have my 9% growth in there, and I can now look and I can, you know, assess the risk and reward based on all of the judgments I made. I can see, you know, oh, did it move closer into the buy zone? So this is a way for you to monitor and track companies either you own or you are watching. Okay, so it's just that easy. It's data, refresh study, pick the way you want to do it, and proceed. With that, I think we're very close to out of time, and I am going to go quickly back, if there's no more tools questions, just to do a quick wrap here.
There are no more tools questions. Our capable staff here, Charles and Joan, have kept up with the questions, and we're all set.
All right, perfect. I just want to remind you to check that help and information tab out. You know, you've got links to all of the webinars that we run, so you can get a quick link to the recording. Our quick start guides, you know, we've got 4 different quick start guides. You know, I gave you the core tonight, but we've got others, so check them out. We've got some reference material, including some calculation material, references, if that's, you know, if you want to know how exactly we make some of these calculations. There is something I'll point out here called the SSG Guidelines for Beginners. For those of you that are true beginners in the audience, check that out. It's a good piece of paper to have by your side to kind of keep you in line or keep you from being overly exuberant. There is also links to our FAQ site and our feature requests. We do have a feature request site, and we encourage you. If you've got some great ideas, we love to hear them. So go to feedback.betterinvesting.org. Give us your feedback. You could vote for some existing ideas that are out there. We use this data to help us make updates and improvements into the tool. We've also got an FAQ site for some very common questions. Go here. You can just use this search box, or you can scroll around through the online tools and read through some of the questions that we have if you're just browsing. That's it. That was a whirlwind, and but I hope that I did leave you with some good information on how to get you started with the CoreSSG. It's really not a difficult tool to use. The navigation is the easy part, and then join us for some of those other judgment webinars. We do have a couple more tools tutorial webinars coming up in the near future. We've got kind of the same kind of a thing, only we are going to be talking about SSG Plus instead of the Core SSG. Susie will be running us through that one, and she will give us insight into navigating the SSG Plus. And then that's on November 10th, and then in December 15th, we're getting ready to always release new updates, make improvements, and so if you want to know what's new in the online tools, what new exciting things have we brought to the table, join us on December 15th and we'll be discussing that. So if there are any other questions, I'm giving you the member services number and email. That's a great place to start if you do have questions. They will sometimes route them to Susie or myself, but they are a wonderful resource to help you get all of your questions answered about the tools. With that, Susie, I think I'm done.
You are, and thank you so much for that very nice job on showing us how to work our way through the tool. We appreciate that, and we appreciate everyone in our audience's attendance, and I'll leave you to wrap it up.
All right, well, I have nothing else to say, guys. We do have a brief survey that if you would be so kind to help us make things better in the future, please fill that out, and we hope to see you next time. Good night.